So here is the part 3 on suspense accounts, reported profits. So now, what happened here is that the final account has been prepared, but there was now, after investigation has been carried out, it was now discovered that there's an error. You get it now? From this question that you see above here now, you can see that the question says James Arco, a trader, engaged a service of an inexperienced bookkeeper. The bookkeeper produced the following information and blah blah blah. But before we move to that, when you are trying to prepare your suspense account after the final account have been made, you know that the one we did, the previous one was after the trial balance, you discovered the error. But here now you have prepared your final account, then you now discovered error in the statement of profits. So after you have prepared, you might have prepared your suspense account, we need to prepare what we call statement of profits. Profits. Statement of profits. So the question is not going to tell you that you should prepare statement of profit, but you need, just put it in the back of your mind that you need to prepare statement of profit. And if you look at this question I have written on the board here, you can see that they only wrote you are required to prepare suspense account and revise the balance sheet. But before you can revise the balance sheet, you need this. It's very important. So now, this is very simple. Just put down, it's very simple. What or how you are going to do is that the first thing is your net profit or your profit for that year. So your profit is blah blah blah. Now there are two things that you affect. What will affect your profit is expenses, purchase, sales, expenses, purchase, sales, return inward, return outward. All those things will affect your profit. All what we used to do in our statement of profit and loss and other comprehensive income. So all those things are what is going to affect your profit. Now we'll not be looking at it one by one. There are some things that you are going to add to the net profit and some that you are going to deduct, which is less. Do you get it now? So let's start with purchase. You know that purchase can be of two types. We can have the purchase to be undercast, and we can have overcast. So how will it affect your net profit? That's what we're going to detect now. Now let's start with purchase undercast. Okay, let's look at this scenario. It's better this way. If your sales is 5,000 naira and your purchase is 2,000 naira, don't forget, if your income increases, if your gross profit increases, your net profit will also increase, right? If your gross profit decreases, your net profit is also going to decrease. Now, we want to look for the gross profit. We want to use an expense now. If your purchase is 2,000 and your sales is 5,000, what is your gross profit? Your gross profit simply means 5,000 minus 2,000, which is what? 3,000. But if your sales is still 5,000 and your purchase is what? 4,000. What is going to be your gross profit? Your gross profit is going to be what? 1,000. Now, if you look at these two cases now, what do you see here? You can see that here, 4,000, the purchase have been overcast. This is purchase overcast, right? It is overcasted by what? 2,000, the difference. But for purchase undercast, let's 2,000 represent purchase undercast because it is lesser than 4,000. Now the effect here is that when the purchase is undercasted, your gross profit is 3,000, right? When it's overcast, your gross profit is 1,000. Simply means an overcast purchase will reduce your gross profit, and if your gross profit reduces, your net profit will also reduce. Do you get it now? And undercast purchase will increase your gross profit. If your gross profit increases, your net profit will also increase. So the effect here is that when the purchase can be two ways. You can subtract and you can add. So it depends, either overcast or undercast. So when the purchase is overcasted, this 4,000, what happens to our net profit? It reduces. So if you want to add to this net profit, anything that reduces your net profit, you will need to add that thing back to it. You get it now? But anything that decrease your net profit, that overstates your net profit, you get it now? You need to subtract it from it. But for overcast of the purchase, it decreases your net profit, so you need to add it to it. Therefore, purchase overcast will be added. Sorry. It means that your purchase overcast will be added to the net profit, but for undercast, it will be the opposite. To be subtracted. You get my question now. Now let's look at the case of sales. Sales, overcast, and undercast. So the same scenario, if the purchase is 3,000 naira and the sales is 5,000 naira, when you subtract it, the gross profit here is going to be what? 2,000 when you subtract it, right? But if the purchase is still 3,000 and the sales reduced to 4,000, the gross profit is going to be what? 1,000. So what do you notice in the gross profit? You know that the gross profit, the value of the gross profit, whether it increases, it means that the net profit is also going to get. So don't look at that. Now what do you notice there, that when we overstated the sales, which is 5,000, the profit is 2,000, but when you understate it 4,000, the profit is 1,000. So if you understate your sales, your gross profit and also your net profit is going to reduce. Do you get it now? When you overstate, this one is understate, right? When you overstate your sales, your gross profit or your net profit is going to increase. Now, when your net profit increases because you overstate it, you get it, you need to subtract it away from the net profit in order to do the necessary correction. But when you understate your net profit, do you get it now? You need to add that amount to it. So, for sales, since it is overstating it here, we need to subtract it. So, sales overcast, we are going to subtract it. But for sales undercast, we are going to add it. So you don't need to cram the format, you just need to understand. You get my point now. Also, we have expenses. You stop at expenses. That's how you are going to do it. Just use your knowledge on profit, statement of profit and loss and other comprehensive income. Then you check that, okay, if this is what we have, what is the effect? It's very simple. Now, the last one that we are going to look at is expenses. So you can check on income yourself. So for expenses now, expenses, let me just move to that P&L account. If your income or your gross profit is 5,000 naira and your expenses is 1,000 naira, what is going to be your net profit? Your net profit is going to be what? When you subtract it, that's 4,000, right? But when your gross profit is still that 5,000 naira and your expenses increase to 2,000 naira, your net profit is going to be the subtraction, which is 3,000 naira. So what this is trying to tell us that when we overstate our expenses, our net profit is going to what? Reduce. But when we understate our expenses, our net profit is going to what? Increase. So when your net profit increase, let's start with this one where we understate our expenses. When your net profit increase, you need to subtract it from it. You get it now. So when you want to subtract it from it, it simply means that expenses understated. Do you get it now? When you understate your expenses, your net profit increases. So since your net profit increases, you need to subtract it from the net profit to do the correct adjustments. So expenses understated or undercast is going to be deducted. But for expenses overcast, that is the opposite. You already know that. And it's already here. It's going to be added. So then you are going to write out the balance of this. You add this up, you are going to add this up, subtract it. So your final answer is your corrected net profit. So your final answer is your corrected net profit. Very easy. Now let's start solving. We are going to start with suspense account. So you can see the information given to us. We have the balance sheet. We are still going to move to the balance sheet, but we are going to start with suspense account. Suspense account. That's the first thing. So for this suspense account, know that we usually start with our journal. We usually prepare journal first. But now we need to do that in our head. We are going to do that often. So the question says the suspense account balance represents the difference on the trial balance. Now B says the purchase debut total for October 8,240 was posted to purchases account as 8,420. So what you notice there, what I see here is that the amount has been overstated. The amount that should be, okay, the amount in the purchase debut is what? 8,240. But was posted to the purchase account, that is error in the transfer of the total of subsidiary. I listed it in my last video. So in the purchases account, what happened is that they recorded 8,420. Now you are going to look at the difference. So 8,420 minus 8,240 is the overcast. That is going to give us what? 180. Now how do we do that? In our journal entry, don't forget I said you prepare this software, but for better understanding, let me just do it. In our journal entry, you know that, okay, let's start with our ledger now. This is our ledger. This is the purchase account. The purchase account, for purchase has debit balance, right? So you recorded 8,420. But the amount that should be recorded was 8,240. Now you have to change this balance at the debit side to 8,240. I said we are going to subtract it. So to get the amount at which it was used to overstate the balance. So the amount there is 180, right? That 180 you are going to take it to the credit side. When you take the 180 to the credit side, you know when you subtract it, your balance brought down is going to be what? Your balance brought down is going to be, when you subtract this, that is 8,240. That is what's going to be your balance. You can try it. The balance side is going to come to the side. So it means that the purchase will be credited. You are going to credit your purchase. Your purchase is credited by its purchase. And the other account there is going to be a suspense account. Maybe what debited 180. So when you now move to your suspense account, what will happen there is that at the debit side, you are going to have purchase. You are going to write purchase overcast to be what? 180. So we are done with the first transaction. So we have done. Look at in our balance sheet, we are giving the balance of suspense accounts at the current asset side. You get it now. So when the suspense account is at the current asset side, it simply means that the suspense account has a debit balance. So at the debit side of our suspense account, you should have started it with balance brought forward. So the balance is what? 2,930. We get it now. To the next one. Closing stock will overcast by 2,000. Closing stock is not going to appear in your suspense account. The reason is that closed dock is the end of the year adjustment. Do you get it now? So it's not going to appear in your trial balance, it's not going to appear in your ledger. Therefore, since it's not going to appear in your trial balance and your ledger, and it is also an adjustment, that's why in most cases you used to see closing stock and the adjustment position or additional information. It's not going to appear in your suspense account. It's just going to appear in your statement of profits and your balance sheet. Now we are going to drop this, move to the next one. We have cash in hand should be 110 naira, but the cash that was recorded is 700 naira. How do we change it to 1010? So let's open the cash account now. The cash that was recorded is 700. The recorded 700 naira as cash, but we want the cash. The question says the cash in hand should be 1010. So how can we get 1010 here? We will look at the difference. One thing you should note is that the amount was overcast, because the question said it should be 110, but they recorded 700. So the amount was overcast, and it was overcast with what? That is when you subtract it, 700 minus 110. That's going to give us 590. When you subtract it now, you are going to have a balance carried down of what? 110, right? So, sorry, the balance carried down should be in the second slide. Balance carried down of 110. So the two balance give us 700, and we are going to have balance brought down here. Balance brought down of what? 110. Therefore, we have successfully transferred it. And how do we do that? We credit the cash account by 590. You get it now. So your cash account, your cash in your journal should be credited by 590, and your suspense is also what? 590. You are going to credit your suspense by 590. Therefore, since you are crediting your suspense in your journal entry, in your suspense account here, you are going to move to the debit side, write cash, and what amount? 590. That's it. That's how to record it. So we have features and fittings account balance of 4,600 has been omitted by the trial balance. So that is trial balance error. It falls under error that affects trial balance. Now, what happened here is that it was omitted. You get it now, the account of fitness, features and fittings. And we know that features and fittings fixed assets, right? Assets has what? Debit balance. Since it was omitted, they did not record it. What how you are going to record it is that your features and fittings are going to record it, which is 4,600, and the other is suspense account, blah, 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 and you are going to credit it. So, moving to the credit side of the suspense account, we are going to write features and fittings. Which is 4,600. Now we are done with this. This. So which one do we have? We have a sales return of 200 naira has been debited to Adewale account. So you know that Adewale return goods, right? The goods is bought. Adewale is a debtor, note that. Anything related to sales like that, and you are returning it, Adewale is a debtor, it is the first one. So Adewale is returning goods. Adewale account should be credited. But what happened here is that they debit the Adewale account with 200 naira. So how do we adjust that? Is it Adewale account? So as I said, Adewale account should be credited, but the question says they debited his account. The amount is 200 naira. Now we want to move this 200 naira to the credit side. How do we do that? What you are going to do first is to multiply this amount by 2. When you multiply the amount by 2, you are going to have about 400. Then record it in the credit side. Look at the magic. You know that when you record it in the credit side, You want to balance of the account. What will happen there is that you have a total balance of 400 naira, because that's the biggest amount. So in order to make this to be 400 naira, you are going to have balance carried down 200 naira. So the addition is 400, right? Then balance brought down 200 naira. You can see that the 200 naira at the debit side has been corrected. It is now in the credit side, right? And what do? We multiply the amount by 2 and added or recorded the amount in the credit side of Adewale account. So your donor is going to be what? Adewale account. You are going to credit it 400 naira. Then the other is suspense account. You are going to debit it 400 naira. So knowing this, your suspense account, what will happen here is that your suspense has a debit balance, right? Moving to the debit side of the suspense account, you are going to write Adewale 400. Note Adewale is a debtor. Now, let's move to the next one. The next question says, interest for half year on loan account has not been paid and no provision made for it. So interest on loan. So interest on loan is an expense, right? You don't have to how will I say it? You don't have to record it here. It is moving to your P&L account, and expenses will only affect what your net profit. That's why you have expenses, either it is overcast or undercast. So that one is moving to your statement of profit. Let's move to the next one. An invoice for 500 naira has been included in stock and purchases, but not posted to the personal account. So one thing to know there is the word personal account. We know that we have debtor account and we have creditors account. Now, look at it carefully. An invoice 500 naira has been included in stock and purchases. So anything related to purchase is talking about the creditor. Anything related to sales is talking about the debtor. Do you get it now? So this is definitely a creditor's account. The personal account is creditor's account. And since it is omitted, because the question says, and this is one-sided omission, note that. It has been recorded in purchase and stock, but not in personal account, which is the creditor account. Creditor account has credit balance. So in your journal and your ledger, the same thing. Your creditor account will be credited. So you are going to credit it. The amount is 500, right? And the other is going to be your suspense. Suspense is going to be 500 also. You just move to your suspense account here and write, because the suspense is debited, so you move to the debit side, then you write your credited amount 500. That is all. So we are done with the suspense account. Take back the score. Now, adding up this, we know that on the credit side we have a balance of 400. The total is 4,600. So for the debit side, plus 180 plus 590 plus 900. The debit side and the credit side is equal to each other. Now we are done with the first one, which is prepare suspense account. But before we can revise our balance sheet, we will need to do what? Prepare a statement of account. So we have statement of account. We already know what will affect your net profit, right? Let's start with our net profit. The net profit given to us is, I'm coming, so naira. The net profit given to us is 80,400. So we have 80,400. Now, what are we going to add and what we are going to subtract? That's what we'll be looking at now. Let's start. We are going to look at it from our question here. We have purchases table. Remember this purchase table that we treated the other time in our suspense account, it was overcasted. And also, purchase is going to affect your net profit. I told you what is going to affect your net profit. Your purchase, your sales, your expenses, your income. All what we have in our statement of profit and loss and other comprehensive income. Your purchase, it is overcast. And what did I talk about, say about overcast? I'm going to add it to the So we have purchase overcast, which is 180. So let's finish. We have closing stock. Yes, closing stock is also asset. So what will happen to your stock? It's not yet. Now let's come into it. Your closing stock is like, okay, for instance now, let's look at this scenario. Your purchase is 3,000. Yes. Your sales is 5,000. Your closing stock is 2,000. Your closing stock is 1,000. So what is going to be your gross profit? Your gross profit is going to be what? You subtract your closing stock from your purchase, which is 2,000 naira. Then subtract it from 5,000, which is what? 3,000. You get it now? So 3,000 is your gross profit. But when your closing stock now increase to 2,000, that is overcast. What will happen? When you subtract this 2,000 from 3,000, you have 1,000. Right? When you now subtract that 1,000 from sales, which is 5,000, you have 4,000. So your gross profit is what? 4,000 naira. So the effect here is that stock. We are going to have stock in both sides, right? We are going to add and we are going to subtract. Let's write stock. Now, is this stock overcast or stock? When this 1,000 is representing undercast, why this 2,000 is representing overcast? When the stock was overcast, when you overcast the stock, what happens is that the gross profit increases. When the gross profit increases, it means the net profit increases, right? So when the net profit increases, we need to reduce it, right? So to reduce it, we will subtract it from the net profit, which simply means that stock overcast, you are going to deduct it. You are going to deduct it. But for undercast, it's the opposite. So stock undercast, you are going to add it. That is all. So I hope you have understood how to get it. It's not by cramming the format, but by understanding it, how the format was maintained. In our question, we have closing stock overcast. What I said the other time. So for closing stock, overcast, we are going to subtract it, which is how much? We have 2,000 there. So we are getting 2,000 there. Don't forget, the other time I talked about interest or loan. I said interest or loan is expenses. So it's moving to your statement of profit. Now, how do we treat that? The government said interest for half year on loan has not been paid and no provision made for it. The question here is not complete. The interest on loan is 12%. It's added to the question, but I think I forgot, so it's my bad. You get now. So the interest on loan is 12%. Now we can now answer the question. Interest for half a year on loan has not been paid and no provision made for it. So how do you calculate your interest on loan? Your interest on loan is going to be 12%, that's 12 over 100, a fraction, multiplied by the total loan, which is 20,000. So this is going to give us what? This can go here. That's 2,400. But the question says half a year. You get my point now? Half a year. So since it is half a year, you are going to divide, because this one is for a year, right? It's for a year. Now, the question says half a year, you are going to divide it by 2. So dividing this, we are going to have our interest on loan. Half a year is going to be 1,200. Don't forget, you are going to divide it by 2, half a year. Now, why are we putting interest on loan here? Expenses undercast and overcast. You get my point now. Interest on loan, since they have not recorded it in the book, it means that it has been undercast. Do you get my point now? They did not record it at all. That is, it has 0. They recorded 0 there, so they will undercast the amount and it should be 1,200. Just look it like that. That they recorded 0 there. So to fall under expenses undercast. Then let's add this up. The addition of this is 3,200. Then move this 180 to this side. I'm going to have 18,580. So let's subtract. Then subtract this 18,580 minus 3,200. That is 15,380. So 15,380 is our corrected net profit. So our corrected net profit is 15,380. So the last part. Now, in our institution, we use vertical format for the balance sheet. But in order for us to save enough space, here we are going to use the format. Do you get my point now? When your exam, use your vertical format as an higher institution student. But we need to manage the space you have here, so I'll be using T format. Now, what will be written up here is revised balance sheet, that is statement of financial position. As an higher institution student, it's going to be revised statement of financial position. Note that. Revised balance sheet. As at 31st December 1993. Now let's start with what we have at the debit side. We don't have debit and credit here, but let's start from the left hand side. So we have capital. Nothing affects the capital, right? So we are going to write the amount back, which is 50,224 naira. Now, the other after capital, we do what? We have our net profit. So we have net profit. The net profit is 15,280. So we have 15,280. Then we have drawings. Look at, we have drawings. Drawings is coming to this side. So we have this to subtract our drawings, right? So let's draw it. And as an institution student, this capital is referred to as equity. Note that. The drawings is 8,260. So let's subtract. Minus 8,260. This gives us 7,120. Then when you add this up, 5224, it gives 57,344. So let's move to our current liabilities. The current liabilities. But note, this loan here does not fall under current liability. It is long-term liability. Now let's start with creditor. The creditor given to us is 26,000 naira. But something affects the creditor, and this is it. Don't forget, in our Suspense Account, we have 500 as creditor. So how does this affect the balance of creditor here? Now let's move back to the question. Let's trace it back. So from this point now, we said an invoice for 500 naira has been included in stock and purchase, but not posted to the personal account. It means that we do not add it to the already balance of the creditor. So because you revise, we are going to do what? We are going to add it. Therefore, you have 26,000 plus the 500 naira, which you didn't add. So the total is 26,500. Now let's look at the next one. We have our price. What's our price, right? We just write it here about 282. Then we have bank overdraft. So for bank overdraft, nothing affects it. We have 14,634. Then what else? So for the loan, interest on loan is also a liability. It's going to move to this side. So we have interest on loan. So the interest on loan is 1,200. Then we have, what do we have also? We have loan. The loan also itself is a long-term liability. I said it the other time. So you have the loan. The loan is what? 20,000 naira. So that's for the left hand side. Now let's move to the right hand side. We are going to start with our fixed assets. So there's an adjustment in this side, and the adjustment here is that our fixed asset is what? 72,208. But here the question says features and fittings, which is also a fixed asset account balance 4,600 naira has been omitted. That is, we do not record it. So we are going to record it. To record it, we just add the balance. So 72,208 naira plus 4,600. That gives 76,808. Do you get my point now? It is 72,208 plus 4,600. So for the next one, we have our current assets. So for the current assets, let's start with stock. Don't forget, here we said the stock was overstated by what? 2,000 naira. And the stock given to us here is 18,826. Now, what are we going to do since it is overstated? As I said the other time, when you overstate something, you need to the adjustment here is that you need to subtract it from it. Get my point? So minus, I'm going to subtract 2,000. When you subtract 2,000, you are going to have what? 16,826. So the next one is debtors. The debtor given to us is 26,015 naira. But we have an adjustment on that debtor. Don't forget, the other time I said Adewale is a debtor. This is the question here. For sales relating to personal accounts, he's talking about debtors. So for Adewale now, the question says a sales return 200 naira has been debited to Adewale account. So we corrected it that Adewale account will be credited. And don't forget that sales return is going to affect the debtor account, which is Adewale. Maybe Adewale bought that goods on credit. You get my point now. So they will need to subtract it from the amount he is owing the creditor. That is the effect. That's why the balance here, the returning word, is going to affect the debtor's account. So what happened here is that he returned a goods, right? So when we work it out, when we did the necessary adjustment, the balance is 400 naira, right? That 400 naira, you are going to deduct it from the total of the debtors. So for the debtor now, the balance is going to be 26,016 naira minus, what are we subtracting? We are subtracting 400 naira. So when you subtract this, we have 25,616 naira. Now, what else? We have prepayment. Nothing affects prepayment, so it's moving back to the solution. We have 1,600. So we have suspense account. No, suspense account is not coming here. We have cash. The cash here now, we said cash in hand should be what? 110. So the cash in hand we are going to record now is 110 naira. Because we have done the necessary adjustments here, we have corrected it here by deducting 590 from the balance. So cash in hand here is 110. Yeah. And what else? Nothing. So let's balance of our account. Let's balance. Starting from the left hand side, we have 57,344 naira plus 26,500 naira plus 228 naira plus 14,634 naira plus 1,200 plus 20,000 naira. That gives 119,960. So for the right hand side, we have 76,808 naira plus 16,826 naira plus 25,616 naira plus 600 plus 110. That gives 119,960. So I hope you really enjoyed the class and you understand. So you can keep practicing, because any question that is going to come out under effect or statement of profit and loss cannot pass what I have written on the board. I can bet it to you, because for 3 straight years in ICANN exam, all the questions that they are setting under this effect or statement of profit and loss, everything relates to what I have written on the board. And each question is part of what I have written on the board. So you understanding this, it's very easy for you to pass it in your ICANN exam when you come across it. Now, I hope you really enjoyed it. Don't forget to like, share, and subscribe to my channel. Bye.